Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is commercial real estate investment expert Eric Holsapple. Now, Eric is a partner with LC Real Estate Group, a multifaceted real estate investment, development, and brokerage firm based in Loveland, Colorado. Now, Eric holds a PhD in economics, has been a real estate CEO and developer for nearly 40 years, lectured real estate at Colorado State University for 20 years, and practiced yoga and meditation for 30 years. Now, Eric was awarded the Colorado State University Real Estate Entrepreneur of the Year in 2010 and BizWest Bravo Entrepreneur of the Year award for Loveland, Colorado in 2015. He has a unique perspective on how merging business and mindfulness can be a catalyst in changing lives. Now, in addition to his real estate endeavors, he is also the author of the Wall Street bestseller, Profit with Presence, the 12 Pillars of Mindful Leadership, which we'll be discussing today as well. And so with that, guys, it's an honor to welcome my guest for today's show, Dr. Eric Holsapple. How you doing, Eric?
I'm doing great, Kevin. Thanks for having me on.
Excited to have you here and excited to learn about you and your business. Obviously, there's a lot to tell and in a short period of time to tell it in. So why don't we do this up? I'll give you a very brief introduction there. Would love for you, if you would, take a few minutes and maybe fill in some of the gaps, and maybe we'll back up a little bit about maybe starting the company LC Real Estate Group, which was a number of decades ago, and then we'll lead up to where we're at today.
Yeah, I got out with an MBA from Colorado State University and went into real estate and was immediately successful. I ran the U.S. subsidiary of an Australian-based firm. They moved me from Denver to Los Angeles and oversaw our offices across the country. And long story short, I was successful climbing the corporate ladder, but I wasn't very happy. I didn't have much of a personal life. I was drinking too much, all those kind of things. They ended up transferring me to Boston, which was close to where I grew up in Maine. And I decided to start my own company, which I did. And I also decided to return to CSU and get my PhD in economics. I was just looking for more purpose than I was getting, more happiness. About that same time, I also found yoga. So, which was my first entry into mindfulness. So I came back to Colorado and started my own business and was getting a doctorate and got through that. And I looked at that university life and said, you know what, I'm just too entrepreneurial. I want to go to work. So I taught as an adjunct and helped them start their real estate center and those kind of things. Well, I started my own business, hit Northern Colorado at the right time and started doing residential subdivisions and shopping centers and those kind of things. And we built up, over the last 25 years or so, built up a really nice portfolio of income producing properties. We also run a home building company, which we closed during COVID. And all that time, I've worked on mindfulness, and our company has adopted mindfully creating community that we just really found, particularly for real estate, being really entrenched in the community and the nonprofits of the community, the habitats and the food banks and all those kind of things just really accelerates the community and accelerates your own personal success. So it's been a great ride where we've done a little bit of everything. It's a pretty small community. Loveland's, not 100,000 yet. We're near Fort Collins, which is, 200 plus. But
yeah. So given that this is a real estate investment show, we'd love to maybe peel back the layers a little bit more of
right.
The founding of your company, and you got your fingers in a number of different asset classes, and I know that your market, you stay pretty close to the core. It seems as though that you don't go too far out of that radius of Loveland. Correct me if I'm wrong.
Yeah.
But with that being said, I see in your portfolio holdings, you've got office, you've got retail, you've got your home building division,
Yeah.
And a litany of, you've got some land holding and things of that nature. And so just, I guess, what was really the initial start? Where was the focus laid? I mean, did you spend your time with retail, office? What was it?
When I came back out of CSU in the late 90s, I found a partner, Don Morosca. His focus was on residential.
Mm-hmm.
On subdivisions. Those weren't building homes at that time, but on that kind of stuff. My expertise was commercial, so I helped him with the financing and those kind of things, the residential, and I dove primarily into the commercial. So, and at the time, land was a lot different. Things that you could really build equity while you got approvals. You could really find a parcel of land, like one of our first ones in Loveland was the Thompson Valley Town Center, a Kroger or King Soopers in this market, but it's a Kroger. shopping center. And really, if you found a piece of land that was agricultural and you could change the zoning into commercial, you could really get a really good bump, especially if you had the anchor tenant. So none of them were really easy, but I think it was easier than it is today because, land prices have escalated so high. So usually we could get in a property, with a few $100,000, and, when you worked in your entitlements, you generated a lot of equity before you ever really dug a hole. So you were able to keep it pretty close to the chest and not have to get a lot of investors in at that time.
Mm-hmm.
Today, I think it requires a lot more equity than it did 20 years ago.
Yeah, yeah. One should still expect. Again, I'm not a developer by trade per se, but one typically expects to build some type of equity during that rezoning and entitlement process. Correct?
You do. It's just in this area, and different areas are different. In this area, it's really changed because of the amount of infrastructure that's needed for most developments. It's just the growth of it. So you really have to do a lot more area infrastructure and streets and roads and connections and those kind of things than you did a while ago. So it just takes more capital too. You do build equity, and most people are doing it through what they call promotes. They raise the money, and then based on what they get a promote for putting the deal together. We didn't do it that way in the old days, but they're finding a way to do it today too.
Sure. So again, you founded the company. Give me the year that you founded. It was I think more than 40 years ago, correct?
Well, my career is 40 years. No, I came out of CSU and I partnered with Don Maraska, and we bought a company called Moore Commercial. There was a big Moore. Bill Moore was a longtime developer of this area. Then we changed the name to Loveland Commercial, and a few years later it was LC Real Estate Group. And we had residential and commercial brokerage and a lot of facets to it over the years.
Okay.
But it really started in earnest about 1996.
Okay. Yeah. Where I was going with that is, so 1996 to today, you guys have obviously built a successful company going through now, I guess a couple downturns, couple recessions. You can't grow to the size group that you guys have grown to without attracting top talent, without building some type of internal company culture that doesn't just attract folks, but actually keeps them around, right? And gets them to buy in. So I'd love to hear exactly what you've done and how you've built that culture and again attracted those individuals that have helped you grow the firm.
We've grown it mostly, and there's exceptions to this, but mostly we started with the interns out of college that came in and they either landed here or somewhere else. If they ended up being really good, they end up, coming into partnership track within 2 to 5 years of that to build. We have a partnership model that never really been one that wanted a big staff, that I have to come in the morning and give a lot of directions on what they do. So it's been more of a partnership model. And I'd say, just kind of one by one, the culture has been more in mindfulness. The management group adopted mindfully creating community. We did an 8-week program at one time where everybody in the company trained and learned a little bit of that. But it's more than, and not everybody's meditating. It doesn't have to be that, but it's really a self-awareness and community-based model where we're all on a nonprofit board or two, and we really help move the community along. And it's in my book, it's called the precession effect. It's, the world works at 90-degree angles. It's not always what we take. It's not always the cold call or the business call we take on directly. It's the leaders that we meet when we're trying to help move the community forward, that just when they have a need, they know you, like you, and trust you, and they call you. It's not always a listing you have. It's who you know. So it's really building that base, and also particularly for real estate, but I think it's true of most businesses. You're only as good as your community. If your community is weak, your investments are weak. So we spend a lot of time building the community.
How do you instill that throughout the company? I guess one might expect that maybe people self-select in or self-select out. If they're not on board with that internal culture, then they just kind of find their way somewhere else. Is that typically what happens?
Yeah, and particularly how we grew it through internships primarily. I think that people, saw what we were about, and they would self-select out. That just wasn't, and we always looked at it that now I know somewhere at ABC firm. We helped them get started. Now I know somebody over there. Now I know somebody over there. Not like that it's bad that somebody leaves you. As long as you leave on good terms, then you know somebody in the other firm. It's awesome. So
How about staying relevant? 1996 to today, times have changed. Even you allude to the fact that just development's a little bit of a different game than what it was back when you got your start. And so, just some of the tactics and strategies that you've that you've implemented that have allowed
Yeah.
your group to stay relevant over these years, and again,
Yeah.
many different asset classes you guys play in.
I think for me, it's basically having a real entrepreneurial spirit and willing to look at a variety of different things. But I would say, particularly, like I was a broker, right, for years, and I'm not relevant in that field anymore. I still have a brokerage license, but I go to the brokerage meetings and I can tell at my age, I'm just not, I'm not in it every day. I don't know all the deals that are happening. They just kind of roll their eyes at me sometimes. So I'm not relevant in that. I mean, I've gotten some big deals done with Walmart and Target and King Soopers over the years. So I know what I'm doing, but I'm not up to date on the current state of that. So keeping relevance a big thing. I mean, I think the other thing, it's hard to keep relevant now with so much absence from the office. So I spend a lot of time, being around the office, trying to be plugged in to stay relevant too. And I'm interested in things. I still love business. I just love it.
Yeah.
I love the connections I make. I love the excitement of it. I love the creativity of it. And I love the wealth that it allows us to have.
Mm-hmm. So you mentioned that during COVID, you guys shut down your home building division.
Yeah.
Just talk to me about the glue that held that together during that down. I mean, that was a fairly long
Yeah.
downtime, right?
Well, and we haven't reopened it. It was
Okay.
we up until the Great Recession, we were only being what were called horizontal developers. We just built lots. We
Mm-hmm.
got infrastructure, we got subdivisions approved and put in infrastructure and sold lots to builders. During the Great Recession, all the builders left. We got lots back and there was no ways to build on them. So we determined it was easier to sell a house than it was a lot because no one would return our phone calls for lots. So we started a home building company and we rode that up to, 100 homes a year. So, which is small in national standards, but for our place, it was a decent size and it was good enough. And then just what happened during COVID, you just couldn't control the costs.
Mm-hmm.
You might make money if appreciation kept happening, but I wasn't willing at this stage of my career to just say, hey, I know it's going to just keep appreciating. When we started a house, we couldn't figure the only way it was going to be profitable was if the appreciation kept happening.
Yeah.
So,
Well, I mean,
and
I think
how,
it was
and
a roll of the dice at the beginning of COVID. Everyone in real estate,
totally,
it was a true roll of the dice, and we
I
stopped
wasn't willing to roll
buying,
it.
and
I wasn't willing to roll
yeah,
it.
we didn't either. I mean, we put the brakes on. We didn't make any acquisitions for a good, I mean, probably until the very end of 2020,
Yeah.
until we actually felt a comfort level that our existing tenants were actually going to be able to pay the rent, and that the world
Yeah.
wasn't going to completely stop in its tracks. But no one knew exactly how that was all going to play out. So
No, I tell you, I was shocked. I was through 4 major downturns in my career up before COVID, and you think you know a thing or two, and then all of a sudden you wake up with that and everything's empty. You go, holy God. Like we have a strategy with our commercial of more service oriented centers that I call it being Amazon proof.
mhm.
You got to go out and still get your nails done, you get your hair done, those kind of things. And those centers were crushed during COVID. We had centers that had zero occupancy. It was very unnerving to be driving
Yeah.
around those times at that time. We had a health club we put in. 24-hour fitness was had only been in a year, paid 6 months rent and went bankrupt. We got the
Wow.
space back. So there was some trying times during COVID. We came out of it. We ended up putting Target in that space. We ended up landing our feet, but it was not cheap.
Yeah.
It was a
Yeah.
good education's expensive, I always say.
Yeah, exactly, exactly. Well, would love to hear. Let's talk about that education. So, a couple different downturns that you've been through. I mean, any lessons that, and I know that COVID was such an anomaly, so very different than
Yeah,
any other economic downturn in the past. But you know what? They're all very different from each other, right? When you
yeah,
really break it down the brass tacks. So, any lessons, just generally
yeah,
speaking, that you
yeah.
pulled out of those various recessions that you've gone through in the past?
Well, first of all, one of the reasons I was motivated to go back and get a PhD in economics was traveling around the country doing real estate, noticing how the different markets were impacted by local economic conditions. I mean, you go to California, it's booming. You go to Texas, it's in a recession. You go somewhere else, Denver's in a recession. You go to Boston, it's booming. So learning economics is one, and being a student of real estate cycles. But the other one that's not as obvious and it ties into the mindfulness is just relationships. I have found that relationships have been the key to surviving and thriving in downturns. And I don't mean about using relations. I mean about having legitimate friendships from people that know you, like you, and trust you, that will take your call. And even if they're not giving you a yes, they'll give you the time of day and they'll give you advice on who you might call. Because it's so hard. It's just like that downturn I was talking about in the 07, 08. I mean, you could not get a call back, from home builders. But we actually developed a major shopping center in north end of Fort Collins during that recession. And I would say, land was a four-letter word. It was impossible to get land done, and we got a deal done. And it was a deal done through long-term relationships and trust, not just, fair market value on a napkin. It was there was a lot more to it. So I'd say relationships, who are you hanging around with, and building those long-term trustful relationships, and taking other people's calls and having them take yours, just to talk about how it's going during those times, because it's really hard to do it alone. And the other model is just a transactional model. And I think a relationship model, which is really hard to maintain, like in the banking industry and some of those now, but you can do it, and they're really worth it in downturns.
Yeah.
Because they're sticky. They're stickier than standard relationships, that are just transactional.
Yeah, no, I agree with you. I mean, it's every bit of a team sport. So agree with everything you say there. Kind of keeping with that same tone. We find ourselves in some volatile times now with the debt markets, and just watching the Fed continue to push the rates up and up and up, and obviously it's having its intended impact on many different parts of the economy, and specifically real estate. Any changes that your firm has made to readapt, or to just any pivots that you've made here recently, or that you intend to make here in the future as we again go through these changing times?
I'd say, what's been the hardest is just being patient,
Yeah.
and not, I've always said I'd rather miss a deal than buy one that I don't want.
Mm-hmm.
We haven't seen the prices adjust down to reflect the capital markets yet, in our area anyway. I know in some ways in office it's starting to happen and whatnot. And I actually see what's happening in the banking sector to be the leading indicator that it's coming. Yet there will be some buys, because it's just been, cap rates haven't adjusted down to the new interest rate reality.
Mm-hmm.
And they were really, really repressed. So I'd say patience, which is hard because, you got more overhead than you need right now because you're not as active.
Yeah.
But do you pull back, or do you, be a little more patient and say it's coming around the corner, or what you do with that is the pivot, and to look at is, I think you got to be willing to lose some deals, but they're coming. I think now these debt facilities are coming due, and the banks are telling them to find a new place. And a lot of places aren't going to want real estate, and if they do, it's it's got a 6 in front of it or close to it.
Mm-hmm.
In the old days were 4 or less, so it's the pricing's a lot different.
I think he's answered my next question, which is, is now time to be, is it time to be bullish or bearish? And I think he spoke to the patience, which equates to bearish, in my opinion. Just wait and see. And every market's a little different, but I think generally speaking, as it sits now, I don't think there's been too much price adjustments outside of, again, maybe office, right? And we all know office, again, it's its own anomaly right now. It's just it's a very it's a space that not many folks want to be in. It's a space that has an uncertain future to it, unless there's some type of redevelopment option to convert it to multifamily, which a lot of folks have done. But again, there's time will tell what ultimately plays out in the long-term office space, especially for more of the older buildings, older vintage buildings that are functionally obsolescent and already maybe had a occupancy or vacancy issue, even leading into COVID. And so, but again, time will tell. And I think the challenge is what to do with them, right? What to do with that space outside of conversion, what to do with those spaces.
Yeah, a couple of things. First, the other thing that's happening is cost creep in our rent rolls. Triple net expenses are increasing. Taxes, these new assessments that are coming out, and I don't know as much as a national phenomenon, but I've got to assume it's similar to what we were experiencing in Colorado. property taxes are going up and whatnot, so that what they're going to have the effect of is quelling net rents. On inability. I mean, the tenants are paying more money for expenses than landlords are on gross rent deals, but on net rent deals, tenants are paying a lot more money, means you can push them a lot less. Plus, what they have to do on the labor side of the balance sheet gives them a couple of big pushes. So, how solid are some of these tenants?
Yeah.
And that is, I think, is something to watch, because sometimes just on a base on a big pro forma sheet, you can't really dive down and see what's happening on the tenant cost side, but it's worth looking at. The other thing I'd say is the replacement cost is so expensive that I think the long term, on some of these office buys is okay, because there's not a lot new going to get built. I mean, some people are still going to want the new office on the location, on the prime location, but the replacement cost is just so high between the sustainability and the inflation and everything. I think construction's going to slow on the commercial side till we get caught up a little bit. Other than some build to suit anomalies, people just need what they need.
No, all great points. I want to back up about just the tenants and the impact of increasing taxes and insurance, and you spoke to, you guys really love like the neighborhood retail. You like the the Amazon proof type tenant base, nails and dry cleaners, things of that nature that you ultimately Amazon can't do for you yet, right? Maybe there's a day that comes where a drone flies your house and does your nails, but you might be a little bit away from that period of time, right? So the interesting thing that comes to mind when we talk about the financial impact of those tenants is most of them aren't savvy enough on the front side to really underwrite those type of risk and what that looks like 3, 4, 5 years down the road, right? And so I mean they're looking at kind of their maybe the escalators in the lease itself and just the base lease amount itself, but they're not really considering that there could be a substantial impact that they have no control over whatsoever, nor does the landlord have control over, which is the taxes and insurance. And so that's an interesting perspective that I have not given any thought to. But do you think that there's going to be some fallout as a result of that? And some of these markets, again, Florida, insurance costs are just out of control, absolutely out of control. Texas, taxes or real estate taxes are absolutely out of control. I don't know what it's like in Colorado, but it sounds like you might be
They're out of
experiencing
control.
similar things. Yeah. So.
They're out of control. Assessments are up 30-40%, and they haven't, and they're not getting things aren't selling enough to get comps to bring them back down again yet. So there aren't those kind of comps yet to bring them back the other way in the next cycle. But I think it has to have an impact, because a lot of those tenants weren't, surviving that well anyway. A lot of so I think when you figure what the labor increase is, just for getting people on the floor, just to be able to pay them a living wage that they'll show up on the sales floor, plus the rental costs and the triple net costs, it's got to have an impact. Now, I haven't seen the smaller tenants closing either. We have maybe 1-2 vacancies across the portfolio, smaller tenants. And you see the big things, the Bed Bath & Beyond bankruptcies and some of those kind of things are kind of dominating that space right now. You also see those bigger retailers all downsizing, Burlington Coat down, going to a smaller footprint. I think because of the Amazon impact, that's going to be a trend. Retailers are going to do a smaller footprint, maybe have some warehouse adjacent where they're delivering and those kind of things. But it's changing for sure.
So what, in your eyes, given that today's maybe not the time to to be bullish, but what would be one of the leading indicators in your eyes that you guys really need to start putting your nose to the grindstone and the timing's coming. There might be some more opportunities coming on the horizon.
Yield, when you can, you got to have the back to have an 8% yield or something again. You got to be able to look at it to be able to pay 6% finance and get some positive leverage. You're going to have to see, prices are going to have to come down. You're going to have to say, hey, yeah, we can actually get a real yield on this. Not just rely on appreciation that we're going to buy it and hang on and whatever, just because we're good looking, it's going to keep appreciating.
I don't feel like yield's been even a yield, day one yield, with the exception of appreciation. It just, I feel like it's been out of the context of conversation for years now.
Out of whack.
Right?
Out of whack.
Yeah. I mean, again,
So that's
just
going to take an adjustment. And what usually makes that adjustment happen is the financial sector, the capital markets.
yeah.
When they say enough, when the Fed says, get the real estate off your balance sheet, and the banks are saying, no more, then things adjust. But generally, we don't adjust until that happens, until we have to. People hang on. They don't want to take a loss. They want, where you're going to go with it, etc. But when the banks make you go, then adjustments start. It's not just banks, but also the Wall Street, all the different capital sources now.
Mm-hmm.
When they pull back and they stop renewing, and they, somewhat, you can watch for what's happening in the office sector. It's happening. Buys will start to happen. You'll have to get yield in the.
Yeah.
Well, I've always had a saying, when the banks say no, I say go.
I like it.
Figure
I
out how,
like it.
because they're always looking in the rearview mirror, right?
Yeah.
Of what the appraisal value is and those kind of things. And when they're saying no, they're creating the prices. They're creating, there aren't financing options. That means those that have the capital will find some buys.
Yeah, I like that. I'll have to write that down. I like that quote. So again, let's speak to the power of relationships, and as it relates to banking relationships. You
Man.
guys you're a more of a localized investor. I'm assuming you've got some pretty strong relationships with bankers and local and regional banks that you've done quite a large amount of work with. This is a generalized question for those that are listening in.
Mm-hmm.
I know the answer and what it means to our company of having those deep relationships and deep ties with banks that we've done reoccurring business with. But what's it mean to you and your group, and how important is it?
Oh, it's been huge, and I would say that it's really less than it was. I mean, we don't have the same, because we're a small company in a small place. So a lot of those banks have been rolled up into bigger banks. We've actually done a lot with credit unions on some of the smaller side, where they pull together 3 or 4 credit unions and then do something. But I've always found, I need to be able to tell my story, to somebody, and how we're going to create it and those kind of things. It can't just be all a balance sheet test of, this happens and that happens and whatever, because as a developers, we're usually real estate long and cash short and the value. So it being, and also it's having someone that knows what the result's going to be before they go into committee. You have to wait the 2-3 months it takes to get in there, and you got it tied up, and then you get bad news on the back. I'd rather have a quick no than a long no any day. That somebody that's got an idea what their committee is going to do and what that, and that's invaluable, because if you're down the track and you run out of all your due diligence time, you spent your money, and then you get those surprises, it's really tough. So having somebody that knows what they're doing on the lending side is huge.
Yeah. That's funny. I think if anyone that's listening here has been in the game long enough, they probably have had that happen to them. Run out of all their due diligence time, and then have go the complete opposite direction once it hits committee, and get a no, and leave you in a scramble mode trying to figure it out. So it's not a fun position to be in.
Yeah, but we've been there.
It does make you a better entrepreneur, I feel. Putting yourself in the corner, and it's not fun. It's stressful, but where there's a will, there's a way.
It's not always the cheapest money, in the development business anyway. It's sometimes sometimes if you're just financing long-term income producing assets, you shop it and you just take the lowest rate, negotiate hard. But in the development business in particular, it's you need to be able to tell your story and have a banker that is there with you.
Let's talk about the book.
Great. Profit with presence.
Yeah. So let's talk about it. Tell us what we can learn if we grab a copy of it, and maybe even as much as what was really the catalyst of actually writing the book. I know that you've practiced a lot of the principles in the book over the last couple of decades, and it's been a big part of your life and your company's overall culture. But just the catalyst itself of writing the book.
I just think that both the business community and the mindfulness community are sometimes at odds. It's like, I'll be mindful once I've made my pile of money and I have time and I take a breath, and the mindfulness community kind of says, business, that's kind of dirty. And I said, that you can't live in a capitalist society and tell people that it's dirty to make money. There's got to be a way to do it. And so I say, affluence increases influence, that having money can help you make a bigger difference. What are you going to do with it? Money's not a purpose. by itself. It's what can you do with it? How can you impact the quality of your life, your kids' life, your family's life? How can you make the community a better place? And those are the things, and I find, that make, life worth living, to be able to do those things. So the book lays out through 12 pillars of mindful leadership how, you can use mindfulness, which is primarily focus. There's a lot of long-winded term definitions for mindfulness. When you boil it down, it's, can I focus on what I choose to focus on at the exclusion of all else, which is all about business. There's nothing, you go into a meeting, everybody's got their smartphone on, their computer is, they're talking, they're texting, they're going, come on, let's focus on what we're doing for 20 minutes and get it done and move on. And also, when I go home, can I turn it off and focus on my family? That's not as easy as said as, to do as say. It's hard because we're pulled constantly at things distracting our attention. So we're trying to do that, trying to establish our purpose in life and set a vision for ourselves. And it's all about goals and objectives too. How do I actually fulfill these goals and objectives? So, and it's not like I don't care about bottom line results. I look at cash every week. I look at financial statements every month. I look at a strategic plan every quarter. But in between those, I really work on being present. I work on being with the people I'm with, forming relationships, and carrying out the plan that I set at the last quarterly meeting, and not worrying about that profit every minute. Now, we got to have profit. Well, we wouldn't be here, right? We just wouldn't be. But I find it much more motivating to have a bigger purpose than just, I'm going to go make some money, and then after I make enough, I'm going to go, build a church somewhere. To me, it's, you can do it all at the same time.
Give me a few examples. I'd like to be able to, maybe expand the context of this conversation and just use a few real world examples of like what this means, being mindful in your business, and then being mindful at home and being present for your family.
Yeah.
Like what that look like in your life?
Focus. Primarily, it's, am I willing to shut the door and talk to somebody that needs me? Am I willing to turn the phone off and have a meeting without being constantly pulled in that direction? Am I willing to draw my attention and focus? Am I willing to think that I can be off my phone for half an hour without my business collapsing? That somebody could wait an hour to hear back from me rather than needing to hear instant, responses to anything that I might need. So, and can I not worry about the bottom line every minute of every day? And it's not that I don't care about it, but I can't be there and here at the same time. I can't be, in the result and be in the process of creating the result at the same time. So to me, it's just being willing to be present to, when I'm talking to you, be present to that. And then, everything's pulling. I got to answer emails, I got to do all those kind of things. But can I also just notice when I'm pulled away and just totally distracted and not, the thing is that we waste so much time now in our society, just being distracted through needless emails and barrages of social media and all those things. Can we just pare those back some and be able to be focused on what we choose? And then when I go home, I choose to focus on my family.
Yeah.
And I'm not perfect at it. It's the hardest. So, but it's worth working on.
We try to forcibly instill the electronics in a basket for a few hours, and it's an interesting uphill battle.
My kids are still telling about the trauma of no TV during the week. They're just telling me, they're older now, but they're saying, "Oh, that was so awful."
Yeah, no,
They
that's
survived.
interesting.
They survived.
I've also found, even speaking to being mindful and being focused, as you operate and grow your company, is that the whole objective of having a company is being able to do bigger things, good things with it's just not having a bottom line profit, but taking that profit and again helping grow your community or helping others, what have you. But you growing a company is great, but I think the end goal should be having a sustainable company, a company that can actually operate when you're not present 24/7.
Exactly.
I've come to find that when I forced myself, up until a couple of years ago, I would, my vacations would maybe consist of 3 days or 4 days, and anxiety would kind of kick in there after that, and I would feel forced to, get back as soon as possible.
Mm-hmm.
And I started forcing myself a couple years ago to do a full week and then 2 weeks. And then, last year was 3 weeks
Awesome.
away. And I did allow myself very little pockets to
Yeah.
to respond to very important emails really early in the morning or in the evening.
Yeah.
Just kind of summarize the day, and only the real important things got responded to. What I found is that a lot of the other stuff, probably 90% of the things that I just kind of ignored, they either figured themselves out or they
Yeah.
weren't even important enough to stick around. They just fell off and faded off into the distance, and there was no impact to the business. The business was better when I came back. You know, we were still functioning as a team. Everyone was doing their part. And, the results spoke for themselves. And so that told me a lot just about the company, and that me being present and me being around doesn't even mean anything. Let's focus the energies on those those concentrated
Yeah.
periods of time and get shit done, right? Get things done
Totally.
that move the business forward. So
And I've found that so many of us like the distractions. We want to be pulled away
makes you
so
feel
that
important.
we aren't, well, that, and we're not present. We're not, we don't,
That too, I
we have
guess.
trouble just being there with another person and being present because we aren't used to it. Once you get used
That's
to it,
interesting. Yeah.
that's more, but the distractions keep us away from it. Constant. Well, in the old days, I would be always busy, was just, just so busy I didn't have time to talk to people.
Do you not
And
feel
it was
that?
a defense mechanism. I was just busy. Leave me alone.
Yeah. You speak about, I think, a real change in our culture, especially with the ability to be virtual and Zoom and not necessarily being in the same room together. And then COVID really accelerated that,
Yeah.
where you've got a lot of companies now that are truly a virtual model, or maybe that's a hybrid model, but still there's not a lot of true social interaction, because doing it via
Mm-hmm.
screen is surely not the same as actually
No, it
being
isn't.
present with one another. And I fear, I really, I crave being around others, and I really
Yeah.
enjoy that. But I also feel like my generation, we're used to that. Like this virtual thing's kind of weird to us, but like the younger crowd, I'm wondering
Yeah.
what type of negative impacts that might have when we look 10 years or 20 years into the future. Any thoughts there?
No, I think a lot.
Yeah.
I think a lot. I think they've just been deprived of nature, and yeah, I think it's huge. I just was reading the Wall Street Journal today, was talking about social media putting curbs on kids that parents aren't doing.
Mm,
Um, yeah, our inability to connect, I think, is why you're seeing all the divisiveness in the world.
yeah.
Our inability, it's just a quick judgment of left, right, whatever they are. Boom, boom. I know everything about them. I just draw a quick judgment, and then we don't have to talk to anybody.
Mm-hmm.
If you have to sit down and talk with somebody, you hear that there's that we have two parties. Come on, we're all over the place. We all have all kinds of different beliefs, and nobody's going to get everything they want. But if we could talk about it, move the ball down the field.
Yeah.
Let's move on. This whole thing about just fighting over everything, it's not productive. And so I think that's that same chamber that our kids are being raised in. It's silos versus, no, life is complicated. People are complicated. It takes a little time to talk to somebody and actually hear what they say about, why they believe what they believe, if they
Mm-hmm.
even know, you know?
Yeah. And at the end of the day, I think you'll probably agree is that the majority of people in this world are good people. They really
Totally.
are. We might have
Totally.
different beliefs, but the majority of people are good
No,
and
and if you
probably
could
would get along if they gave each
if
other the
you
opportunity to
got
have
them
a
all in a room and just said, here's what we have to do, you got till
yeah,
Friday, figure this out.
yeah.
We do it in our programs. We run a leadership program. Nobody knows if they're left, right, center, where they
That's
are.
right. That's right.
They just get along. They just figure
Yeah.
things out. We raise money for good causes. We do different things, and you just get along. But when you get on this labeling that's this silo thing of our society, it's just so unproductive.
Well, for those that Eric, for those that want to grab a copy of the book, is it Amazon? Is that the best place to send them? Do you have a
Yeah,
website that has
it's for
resources
sale
or
on Amazon.com.
okay.
And it's also in our website, livinginthegap.org. You'll also find information. We're registering for our 9-month mindful leadership program, starts in August, which is the book is the principles of it. But we also run that in person in Colorado, 9 days in Colorado over the course of 9
Okay.
months.
Well, fantastic. Well, I was hoping to get a copy of the book and read it, and I ordered the hard copy because I like hard copies.
Yeah, me
And
too.
it got lost in transit USPS, and now it's on its way back again. And so
Oh, I
anyway, I
hope
did
you
get
get to it.
yeah,
Hope it's worth.
I
Hope
was
it's worth
hoping to
your
read it
time.
before we actually had this interview, but that didn't occur. But I will
Well,
get to it. I was looking forward
appreciate
to it. But I really appreciate you coming to the show and to sharing lots of valuable insights that you have here, and wishing you all the best on your journey. And maybe look forward to having you back here in the future. I'll probably have questions once I read the book, so maybe we bring you back on to
Bring me
a
on.
second volume. So
I'd love to do it. I appreciate being on. Great show.
with that, Eric, pleasure meeting you, and you have a great day. Okay.
Thank you.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Butt, wishing you huge success. Take care now.